Hello guys, this is Obed FX and welcome to the Obed FX Academy channel. In this channel, we'll make trading very simple. So once again, today we killed back to back. So it's been 3 days now, the back to back. We've had a 3 day streak now on the back to back, right? So just be in the right community, have the right mindset, have the right skill, knowledge first, structure over shortcut, right? So today we did the same thing and I want to do a quick breakdown. I'm going to continue to do the breakdown until trading is simple, until every single individual on this community finds trading what very simple. So without wasting much time, today we killed one straight TP, two break-evens and one SL. So let's get straight into it. We're still profitable. That's the main aim. The main aim is to be profitable for the day. Let's get straight into it. Okay, now I want to be very realistic on the chart, right? So this is it, fifth match today, Thursday, fifth match. So 6 o'clock. Let me be realistic. I said what this is a breakdown how I approach the market, right? So let's get straight into it, right? I said I start from my maximum time frame. I go is what the 1 hour. So now when I move to 1 hour, what do I do? Before the day started, I have to analyze what is the trend of the market, the directional bias, right? Okay, this was how price was moving, higher highs, breaking structures, higher highs, so on. So I just want to look at what price is doing before the day started, right? But price is what's moving in a downtrend. So look at what price is doing. Look at up to this point. You see, the shift here, the shift here. So we are what? We are bearish. Automatically, I knew my bias that we are bearish. So I'm being realistic. The way I started, look at the way I started. I just was looking for what price is doing before I enter the market. I don't just go straight that, okay, I'm going to buy, I'm going to sell. No, I have to know my directional bias. I have to know the structure, right? So I marked 6 o'clock when I came on the chart. So before I came to the market, I saw that, okay, we are what? We are bearish. What else do I do? I move to, since they are spy. Look at this very well. There are weeks here, weeks here. I'm not seeing the exact thing I want. So I'll move to the next time frame, which is what the 30 minutes time frame. That's the next time frame I moved to. 30 minutes. Okay. After that, on 30 minutes, what do you see now? On 30-minute time frame, what do you see price is doing before price is approaching this area? Look at it very well. Price was what? Look at the current trend. Price was did something like this, pushed to the upside and what came to the downside. Look at it very well. This is what price did. So now we are moving in a downtrend. So it was when I entered the market, it was my mind that, okay, I have my directional bias, we are bearish, my structure, price moving in what? You know that downtrend. When price is moving what? Lower highs and lower lows, creating lower highs and lower lows. I'm bearish. So I woke up very bearish on gold, looking for sales on gold. Right? So I don't just approach the market going to buy, going to sell. No, I start from what price has been doing when I wasn't on the chart and look at what he's doing now. So in this scenario, what price was doing when I wasn't on the chart was buying. But when I came on the chart, it has changed character and it's what's currently selling. Right? The next thing I have to do is look for my point of interest and inducement. Right? So I move to the next time frame, which is 15 minutes time frame. Right? Okay, now let's look at what price did here. Just follow the same criteria. Let's look at what price did here. Follow the same. When you move to the next time frame, just look at the direction. What is it doing? What is it doing before I approach the market, right? So here is it. Look at what price did. It moved up, came down, moved up. It was came down, moved up. We know they are looking for sales, and our price was broke structure to the downside, right? So I know that what price has now broke structure to the downside. The next thing I have to do is the break. I just mark the break. This is the break. This is the break. Now I have the break, and I said what I know my directional bias, I know my market structure, and I know that when price is moving in a downtrend, I'm not on point of interest. It will either use the breaker block, or it will go and use the order block. It will use the breaker block or the order block. So in this situation, when price broke, right, we are having 2 points of interest, right? When price is having 2 points of interest. So now let's mark the point of interest together. This is the first point of interest, the breaker block, the low it took out. One. And now let's mark the second point of interest. There's the order block, opposite candle, order block, the opposite candle before the break of structure or market structure shift, right? So here is it. Okay, now let's get straight into it. Now that I have my point of interest, you know, point of interest, we know our market structure. I started from 1 at 30 minutes and moved to we are now in 15 minutes. You know our bias that we are bearish, right? This is the breakdown of the exact thing I do. Don't complicate trading. It's very simple. After that, when I know that okay, we are moving in the bearish structure, price is moving in the bearish structure, when I'm on the next topic, which was finding my point of interest. Finding my point of interest, it's either use what the breaker block or your other block. Then now you've marked your 2 points of interest. You've marked the 2 points of interest. What's the next thing you are going to do after marking your next point of interest? This is what find your inducement. And I said inducement is what the first pullback after the break to the downside. So when price is moving in the downside, so someone told me to explain inducement. So when price break, you see price just took out this low. So the first pullback before price moves down is the inducement. You understand? But Samsung ka ochimu say market na ekwa na take down the lower and reject it. Then market na movie what enko one enko up boom and Samsung ko down boom enko up na ebe chin mu kakra and your friend retracement a chin mu kakra a friend retracement into shenye shanmi shanmi bi biem no ehuni shenye nti yɛte ase sɛ yɛnim structure no ebreki deɛ ebreki na yɛka no ebreki yɛ no hwɛ akyi ne mu no hwɛ akyi ne mu no ebreki to the downside akyi ne mu because in sɛ market no ɛnkɔ hwee pum down and ɛsan so nkɔ top pum ɛkɔ a ebetwi ne mu so ate ase so price retraced a retrace here nti ɛne yɛfrɛ no inducement ebreki structure a first pullback is the inducement. Now I hope I explained to you if you understood inducement. So I just marked my inducement. The first pullback, I just marked my inducement. And now the next thing is what the valid you've identified what the directional bias, you've identified what the market structure, you've identified what your inducement, you've marked what your 2 points of interest. Now it is your duty to find the valid points of interest. And I gave you 3 rules for valid points of interest. The first one is what it must be what closest to the inducement. The next thing is what so when you check it must be closest to the inducement. The number 2 is what it should not be mitigated, which is initial price and touching. And the last thing is that when you have a breaker block and an order block on the same level, you go for it, the order block. So now let's get straight into it. So in this situation, this point of interest, which is the breaker, low now price take and yet valid adding because it has been mitigated. A valid point of interest what it shouldn't be mitigated. When the retracement occurs, it shouldn't touch it. Surprise a chini more and you say fan on honka and fan on one car patches saying a valid, but the no car as said invalid, right? So that's what we are moving straight into. So I knew that this we now assume that okay, this point of interest is what it's not valid. The only point of interest we now had was what this other block that caused what price to move. This other block that caused price to move. So the next thing I spoke about is what looking for your target. I spoke very well about your target, right? So your target, your stop loss, automatically you know that your stop loss is what this is the candle, the other block, the opposite candle before a break of structure. It is the one what's moving market. Since it is the one moving the market, your stop loss should what be above it, slightly above it. But most of the times, I don't most of the time target here. If you can risk it, you can just put your stop loss above here. But no matter what, it won't still come there to respect the point of interest. I'm not saying it's 100% strategy, but that's what I've been using. And if you find myself to be posting a profitable setup, you've been seeing from my chart, it's very profitable, so you can go with it. Okay, so now after finding it, now someone asks, what is the target? For my target, I always say, after the retracement, the highest point it goes. A chinumuria, highest points are it's miko. It's what they mean beam. When price is moving in this downtrend and it breaks structure, it break it, take out this lower. Ne chinumua. How high are in chinumunu or chinumua? How high it goes? That's your target. So now let's pay attention here. You see, when price retraced, that's the inducement. When price retraced here, look at it very well. When price retraced, price echinimuno. This is how high can win a market. That's how high it went. How high it went before it started rejecting. So someone will ask, why didn't I mark this low? And why did I mark here? As you can see, as soon as what price tapped that in, it's tapped this what in, then started what retracing. So that's what how to set an accurate target. So someone also asks, oh Obed, I see, oh Obed, I see this one. Oh. Someone asks, oh Obed, why didn't you use this? Because after the retracement, this is how high it went. Look at that candle that was formed. It didn't break structure. Look at it. And taking out that low. Obed check a candle now. It taking out that low. The candle that took out the low after the retracement. So look at it very careful. You see, this is the candle that took out the low. So that was my target. That was what I was targeting. Right? That was my target, my take profit target. So as simple as that, we just smash what full take profit, 300 pips, 300 plus pips. Let's see. This is how simple I analyze the market. So now I want to talk about the back to back. The back to back, that's the buys, the counter buys. I'm become very interested in back to back with Charlie. As you can see, 300 pips, straight to take profit. 300 plus pips, straight to take profit. Simple. Just don't complicate trading. Make trading simple. And someone asks, oh Ben, how did you catch the buy? I've been monitoring your chart. I saw that you also what did a counter buy. This is not magic. No, it is not magic. As I said earlier, I check what. Let's clear and go over the buys again. Let's clear chart so that you see the buys. So the buys. Let's go over again. So now I said what? I'll start from what 1 hour, right? I'll start from 1 hour. We are here. They are wicks. How can you be trading wicks? So move to 30 minutes. 30 minutes was when we took the sales. We're in 50 minutes, we took the sales. So I was on 50 minutes time frame. When I saw that, oh, when price triggered, you know that we took the sales at this zone. We took the sales at this zone. Okay, so I saw that when price triggered, what did you do? Your mind should be what price is doing. Once a bar say, and send a trim bar from, so it's just say a bearish what, then it also broke structure to the upside. So the trend is your friend. When price is moving, you have to be following it. When it moves to the upside, you're a retail trader. The last time we spoke, that's why I said you have to watch the basics of the videos. Don't just skip to break down. Watch financial institution. Watch from the beginning. Retail traders, we don't move the market. What we follow the trend. Institutional orders, large banks, central banks, they move the market. So when they are moving, we just follow their move and capitalize on it, right? Don't counter trend. So I saw that okay, price has broke structure to the upside. So I knew my buyers. In this situation, I found my buyers on the 15 minutes time frame. So I have to move to 5 minutes. So someone will ask, why did on the first one I took the trade on 15 minutes? No, as a trader, you have to be adjusting from one time frame to the other, right? So when you find your buyers on 30 minutes time frame, you can't be rating that huge pips. You have to move to 15 or 5 minutes for trade setup. And now I have my buyers in 15 minutes time frame. I'll be moving to 5 minutes and 3 minutes for setup. So when I saw this, I immediately moved to 5 minutes. I immediately moved to 5 minutes. Okay, so what's happening to the market? What is causing this movement in the market? Okay, so I saw that this was how price was moved. This is where the shift occurred. If you can see very closely, just look at it very well. Look at it. Look at it. When price moved like this and started breaking to the downside, moving to the downside, and now finally broke to the downside. So I said, oh, okay. After we broke to the downside, I said, okay, we are bearish, but immediately price took out this high. I said, okay, we are currently moving in an uptrend, and I said this is the uptrend entries. When in an uptrend, when price is moving in high, creating higher highs, higher lows, creating higher highs, it will either use the breaker block or use the other block, right? Simple as that. So as you can see, those who don't know the price, the right point of interest, as you can see, as soon as price they entered here, price took them out. Those who don't know the right point of interest, as soon as price came to the breaker block, price took them out and triggered on the other block and went to the upside. As simple as that. Very simple, because when price is moving in an uptrend, breaking structures, so either use the breaker block or the other block, but you have to find the right point of interest before you set your limit, right? So now let's get straight into it. So when I saw that price has broke structure, so I found my buyers in market structure on 15 minutes time frame. So now I've moved to 5 minutes to just find my valid point of interest. So I saw that this was the first. I said there are 2 points of interest when price breaks structure to the upside, right? I always say this is what This is the breaker block. I marked my 2 points of interest, the breaker block. And as I always say, anytime I come, just follow the video. I bring something new. So you just have to be following these videos I've been posting. If you put your entry on the wick, you see you missed. So this is another hint. So that I'm giving another code again. Anytime, just follow up. Anytime I come on the screen, anytime I deliver a video, there would be a hint, a key hint I'll deliver out. So this is the secret. In a situation where the other block, the body is smaller, in a situation when the body is smaller, you have to take or draw all the zone plus the wick. As you can see, my point of interest, I drew the whole zone plus the wick. If you use the body, you would what? You miss the entry and come and what? Hit SL. So that's how we do it, right? So you have to choose what? The body, right? The body. As simple as that. Let's move straight into it. Today I've delivered another what? Another key, another code, right? So let's move on. So I identified these 2 points of interest, which was what? The breaker block, as I've marked the breaker block, and the what? The other block I marked plus the weight, as I said earlier, when the body is small. So the breaker block. So now how life oh bed. Now we know that when price is what is buying, is breaking structures to the upside. So either use what the breaker block and the other block. And now I know my market structure. I know my directional bias. I've identified the 2 points of interest, which is the breaker block and the other block. Now which one will push the price up? And that's what you have to look for, the valid point of interest. So now, as you can see, when price took out this is just the point of interest I've marked. We are now moving to inducement. We've not spoke about inducement. Inducement, we explained the first one and say price will take it out in chimu first obey in chimu first or chinimu first one and then your point of interest, right? A chinimu and your point of it's baby a bit chinimu. Sorry man, this is point of interest. Baby a bit chinimu akon and then your inducement, right? So as you can see here, you can see automatically is that the breaker block is what is mitigated. Become mitigated and your brophobia. I purchase mitigated other block the price moved to tap the breaker block. So when price moved to tap the breaker block, I said that okay, the breaker block has been what? It has been violated. It is no longer valid. Then I automatically sent this buys. At that time we're in this cell. At that time we're in this cells. I'll send it. You can see it on the screen. At that time, when this sales running around 300 pips plus, we've already closed partial profits and we are just waiting for price to trigger her buys in, right? So we just send this one. So price tapped. It was simple as that. Price then I said for the take profit target, price Ochini Muria, the highest it can go. The highest it can go. Price Chinimuria, the highest it can go. That's the take profit target. And as you know, if you've been following my trade, I'm someone who has been always risking, following my risk management, following 1:3. When I get 1:3, I'll tell you to what break even, secure partial profits, and let the full trade move on. But this was our target. This was my target. I sent it to the Telegram community. We hit break even. Those who had break even, more chances, more trades available, more trades ahead. This is not, there are several opportunities in the market, right? So when you just get a risk reward that you trade by, when you hit that target, you are off. You're out of the market. You are someone who uses 1:5. You hit 1:5 out, 1:3, you're out. For me, 1:3. I use 1:3 because another key. Just follow these videos. Follow these videos because I know that I've backtested my strategy and seen that there is no way I can hit 3 SLs in a row. If you've been following my Telegram community, if I hit 1 SL, the next trade is a TP. Because with this strategy, I can't hit 3 SLs in a row. No, the highest is a two setup, 2 SLs. The next one, TP or break even. That's all. Even before I hit break even, I've secured partial profits. So now let's move on to it. So price tapped in, triggered us in. We're like, okay, I see all is in the Telegram community. And I'm someone who also likes the trading confirmation. So when I entered the market, this was my key, the major target, the overall target, which was around what 1:4. The main target was around 1:4.8, almost 1:5. But I knew that I'll be exiting around this area, which is 1:3. Right. So when price changes character, I just set break even. This was my main target. That's 1:3. I always come for 1:3 and I'm out of the market. So this is what I did. So after your price triggers, there are more chances for you to re-enter the chart again, to re-enter, because the main target is what to make profit. This is how we scaling. So after it, you can see that what price gave confirmation, which is a beautiful morning star. So we entered another position here. We know our overall target. We entered another position here. Then we hit our 1:3. Then we closed positions, but the overall target wasn't hit. So this the sales was the first TP, and so I assume this was a break even to the community because this was the target. But to me, I secured profit because I go for 1:3 if you trade with me. So as soon as this is what price did again. If we're following the community, price did what? Price broke to the downside again. So that okay, we are now what? Bearish. We are now bearish. We are bearish. Just follow the trend. If it moves to the down, you to follow, move to the downside. If it moves to the upside, move to the upside. You don't control the market. The institutions just follow them. So when price broke, this was the first pullback in Chimu first. In Chimu, first one, and then one, Mimbium, and I'm at the line at one. And then in Chimu first one, I also sent it to the community. I will be buying from it. Has mitigated the breaker block. Breaker block, they mitigating. It's like other block. No. Oh, we marked the other block, but price didn't trigger. Price didn't trigger, but I'm expecting price to come there again and trigger because that point is very valid to me. That point is very valid. So I'm still waiting if price could get to that zone. Right. So now let's move to BTC. We also had BTC setup, and I want to do another breakdown on the BTC setup to support so that you know that you just have to keep doing the same thing over and over and over again. The BTC here is the BTC. I was very heated on BTC. If you're in my community, I was very heated on BTC. So this was the analysis on BTC. I want a clear chart. I want a clean chart. I want a clean chart. A clean chart. Okay, I'm looking for some buys. In my recent video, I sent this buys on BTC. So let's use this chart. Okay, that one. So I think I'm looking at that same buys. Hey, so Charlie, which one should I use? Okay, let me use this. Let me clear. Let me clear. Okay, now let's move straight into it. As I always say, the first thing was to check the dice. So price was actually here. Price was here. Price was here when I came to the market. 6 o'clock, 7 o'clock. So I saw that I always say that the trend is your friend. It is your friend, right? Price was moving in a downside, in a downtrend. Then I'll move to the upside automatically. So I came to the market so that we are bullish. I'm looking for buys. Right? So the next thing I have to do is move to the next time frame and look at what is happening on the chart. Look at what is happening on the chart. Right? So after I saw that we are bullish on 1 hour, the next time frame 30 minutes. So I saw that okay, this is how price is moving. This is how price is moving, move down. Price just was moving in the downside. Moving lower highs, lower lows, lower highs, and lower lows until I saw that okay, price has changed, it's moving the downside. So my idea was that I have to just find what the valid point of interest, look for my inducement, and just set my limits and enter. Right. So this one, as you can, this is the low. Price went. I know my buyers on 1 hour that we are bullish. I mark my low. The next thing I have to do is just mark my. It's very simple. The next thing I have to do is mark my inducement. The first pullback, a break in when a first pullback, right? Mark my low, the first pullback. The next thing I have to do is check how high it went, mark it as my target. How high it went, mark it as my target. How high it went, mark it as my target. Now you know that when price is moving higher highs, when price moving higher highs, higher low, it's either use the breaker block and the other block. And you know that the breaker block price when price was retracing, it mitigated the breaker block. Now you know that the value point of interest is the other block. As simple as that. As simple. You know that you are going to use this other block for entry. You know that you are going to use this other block. Someone will say it hits SL. Let's move and see whether it hits SL. You can see on the chart. Price didn't hit SL. As you can see, price never hit SL. Let me say it over again. So as simple as that, you just set to SL, you set to TPA. So price went and hit break even again. So this was the second break even for the day. This was the second break even. Price triggered, went up, and just came back to break even. Break even. As usual, 1:3. That's why I advise always 1:3. You secure and set break even. Simple. 1:3. Those who are following the community, who know my risk management, you watch my videos, go to the parts of this Telegram community. You see my video on risk management. I follow 1:3. As you can see here, 1:3. I'm out, and I'll just set the break even to the running trade, which is 1:5. So when that one hits break even, I'm still profitable for the day. So today in the community, we had what? We had one SL, which was the BTC sell. This was a very trader. I couldn't believe my eyes. The community were all waiting for this very single sales on BTC. It was a very, it's, look at, as you can see, this price triggered, moved 1:3. We clicked 1:3, but those who were waiting for to take profits, they couldn't. But anyways, I'm saying it again, always the best risk to reward is to choose what? 1:3. If you are following my strategy, always follow 1:3, secure profits at 1:3, and set break even for the remaining profits what to run. This is how we do it in this community. 1:3, secure partial profit, and let trade run. I use 1:3 because I explain again, not more than 3 losses, and I'm out. So this is the painful trade. Let me remove the buys we cut. Let me move the community. We're all waiting. As simple, just repeat the same thing. As you can see this week here, I drew it. I price broke Shakhtar. This was the first pullback in Chimono. Once I also draw a line way, I wanted to just leave these two lines there. It's in the setup and not set this limit. I'll not show you where I'll be entering when I was done, but I decided to know there are beginners in this, so I just had to just put my limit because I did it there because this is the other block. Price didn't mitigate what the breaker block. It didn't mitigate the other block, but the valid one is the closest one, right? So this is where I'm learning something new. I'm learning something new because this was the situation that the point of the other block. And you have to know that you don't control the market. The point of the other block, it wasn't even more than this. I even added more rigs to it because I saw that now I don't have to be flexing my muscles with this tiny rigs. I don't have to flex the muscles with this tiny rigs. I just gave it a gap, a breathing space. Price said nah. So as you can see, Ochin Murie, this is how high it went. So that was my target. But price said nah, I made my own flex for me. So then price like straight hits SL and straight to TP. How painful. Within minutes, less than 2 minutes, price triggered back straight to TP like SL. Like I couldn't believe it. So I'm not adding any adjustments. I'm just maintaining, just understanding that losses are part of the game. Want to add an adjustment or put in the situation when it's to train out of the game. So if I had used that setup, if I had knew that when I have what other block and a breaker block, but the breaker block is the valid point of interest and it's having a tiny one, I suggest what move it to the other block and set what 1:3 and out that be what profitable for the day. So at the end of it all, the community had what? The community had one full TP on BTC on gold in the morning, a quick one in the morning, a quick full TP, one break even on gold, the buys. But to me, it was a profitable trade, 1:3. And to the sells. So to me, I had three TPs, one SL. That was the BTC. The gold sells 1:3, the gold buys 1:3, and the BTC buys 1:3, and we hit SL on the BTC sell. That was what today on my personal trading journal. I had 3 TPs, one SL, but the community had one full TP, two break evens, and one SL, which they were still profitable because the one TP, which was the gold 1:5, was over 300 pips, and the sell on BTC they didn't even reach 60 pips. So they were still profitable at the end of the day. I hope you enjoyed this video. And if this video changed your perspective, if this video made trading very simple to you, don't forget what to hit the subscribe button, turn on the notification, comment, share to others who are finding what trading very simple. The main aim is what make trading what very simple. This is the best platform you can find trading the beginner from beginner to advanced. Just click on what the subscribe button, turn on your notification, comment, like, and share. That's the best you can do to promote this channel. Don't forget to follow on all social media platforms.